Hello and welcome back to the Retire While You Work podcast. I am Carson Odom. I've got with me today Myles Zuger, another wealth advisor here at Adams Wealth Partners, and a special guest, the one, the only David Adams, owner and founder of Adams Wealth Partners. So, fellas, thanks for joining today.
Yep, good to be here. What are we
excited.
talking about today? What are we talking about today? What's the topic of the hour?
Yeah. As we wrap up 2024, I think it's a lot of people use the end of a year as a time of not only planning for the future year, but also as a time of reflection. So I feel like today would be a good opportunity for all of us just to discuss some things that we do on a personal level, but really on the in the realm of finances, things that we do, one, to reflect. What do we do to look back on the previous year in our own personal finances, or how we advise clients to look back on a previous year? And also, with that knowledge, what will we do to plan for the upcoming year? What are things that we'll look at? What are trends that will look like in our own personal world of finances to make better decisions financially for the upcoming year, or set goals for yourself or your business if you have one? So why don't we kick it off with you, David? You own a business. You're a small business owner. So on the reflection side, what are some things that you do?
Yeah, great topic. Sitting here making some notes, and you got me thinking already. I like this time of year. I mean, this morning the three of us actually sat down and went through business goals for the next year, everything from compensation to doing kind of pro formas on our P&L. And so I'll back up. I'll say this time of year, what I like to do is do goal planning for personal and for business. So every year, and I've done this probably my 20th year of doing this, I kind of write down, reflect on the last year. What are some things compared to goals I had for last year that I accomplished on a personal level? Physical health, mental health, spiritual relationships, all those things, really reflecting goals that I had versus what I felt like I did that year, and then create new goals for the following year. And then I do that on business as well. So, and a lot of that I do with the team now, but for 10 or so years, that was kind of just me, and I had a very small team. So I was doing this in more of a silo. And then now, like I said, today, the three of us spent, a while going through kind of big picture business goals for the next year and looking at a reflection of 2024 from the financials, but also things that we did well, things like marketing, team culture, all those things. And then looking at things that we want to enhance next year, or things that we feel like we fell short of. So I like this time of year going through both of those categories. And if you start doing it for multiple years, you start to see trends, you check things off the list, which feels really good. You can go back and see, gosh, over the last 10 years, I've made a lot of progress in these areas, even though maybe this past year it felt like I was kind of in a rut or whatever it was. So I think that's really important.
That's good. What about you, Myles?
Kind of similar. I think I just like to reflect on the past year and see where the year started, whether it was savings or investments that I had. Look at contributions that I made into the accounts, just to see how I did from that aspect of the year, and then goals my wife and I maybe had as a household. Just seeing some things we said we wanted to do the start of the year. Were we able to accomplish those together? Maybe yes or no. Just because you didn't accomplish one of your goals doesn't mean it was bad. Maybe it was just something you guys changed priorities on, or you change priorities on throughout the year when it comes to that. And then I also like to start looking ahead for the next year, just big picture planning. What are new goals that we want to accomplish, whether it's adding another rental real estate property into the portfolio, or just trying to save more monthly from a budgeting perspective. And I think it's a good time for people who maybe are looking, it's the end of the year, so maybe you're having year-end reviews, getting your raises, getting year-end bonuses. What are plans for those? How can you make them productive inside of a financial plan, instead of just going and spending them on things you don't necessarily need, or just blowing them on expensive items? Work those into the plan in a smart way. Maybe reward yourself with something, but not all that cash. And then if you are getting a raise going into next year, how can you allocate that to be productive? Maybe you up your monthly contributions into investment accounts, or if you're saving for a long-term goal, just kind of stick that away in cash, or maybe even pay some debt off. So I like to reflect and then kind of look ahead and create some new goals moving into next year.
Just before I forget, and before you go, Carson, I'd say when you mentioned looking at automatic contributions, I think that's a big one. I try to do that too. Like, what did I commit to on a monthly basis into my investment accounts? Did I keep that going for the full 12 months? And what does that represent? And then were there any other additional, contributions, lump sums I made during the year? So I try to set a goal at the beginning of the year. I want to save X amount for the entire year in retirement versus personal accounts versus vacation account, whatever it is. And then I try to set myself up for success. But let's just say, okay, I want to save $10,000 in this account or $12,000 in this account. I'm going to do 1,000 a month. And so making sure that I did that. And then if I fell short going into the next year, really looking at encouraging myself to make those automatic contributions versus relying on human nature to say, oh, I'm going to put 12,000 in that account towards the end of the year. The automatic monthly kind of ACH is very powerful and just creates more discipline. So I think that's really important.
That's good. One of my favorite quotes. Yeah, one of the favorite quotes from my dad growing up. It was always "Get the job done, then have fun," and I like that in personal finance as well because we sit here and walk through financial plans with people almost on a daily basis, and a lot of times, if you have a year where you get rewarded through your hard work, you get a big bonus at the end of the year. You don't necessarily have to put this pressure on yourself of, okay, just because I get a good bonus on one extreme, I just have to save it. Like you said, Myles, if you're already on track for your goals, if you're already on track for where you want to be financially, it's perfectly okay to reward yourself. Now, I'm not just saying, don't save your money. But if you're already on track for hitting your goals and where you want to be, with our retire while you work philosophy and mindset, I think it would be healthy to, like Myles said, enjoy it, reap the benefit of your hard work, and reward yourself with a vacation or whatever priorities in your life would be. But that's a little aside.
I like to call, and I've read before in several books, called memory dividends. Not just the dividends from investments, but creating those memory dividends of experiences with those you love, traveling, memories around the holidays, visiting your family, babies, grandbabies, nieces, nephews. All those things create are just as good of, I'd argue, a much better investment than anything your money can get you in the stock market and that sort of thing. But they're both important. But I see a lot of times people neglect one or the other. So that's 100%. Kind of the personal and business side of it.
That's right. For me personally, I track our spending on an annual basis, I track our spending. So at the end of the year, it's a really good opportunity for me to look back and compare it to prior year, for example. Like in the year where we went from having one kid now to two kids, our spending was pretty different in that year following, just because we had a whole nother mouth to feed or a whole nother child living in the house. But in other years, you can kind of reflect. And I think it's a really good opportunity to view how has your spending changed compared to the prior year that you might not have noticed day to day. But over an annual period, you can say, okay, last year in 2023, I'm making a number up. We spent $10,000 a month. 2024, we spent, holy crap, $14,000 a month. We really let our overall lifestyle creep up. Are we okay with this? Is our budget okay with this? Does our income allow this to happen? Or are we going backwards, floating money on credit cards? It's just that period in time of reflection allows you to look at a bigger picture when it's so hard to see the big picture when you're just spending money every single day, paying for bills. You don't necessarily realize the large impact those day-to-day spending, can have on your finances over the long term. So that, to me, that reflection, looking back at your spending, most importantly, you have to be watching your spending to even have that information. So,
which, speaking of, one little thing I'd maybe think about, because I try to do that at the end of every year, but also like going through your subscriptions on your phone, your iPhone, or just through your search through your Gmail or whatever, and try to see how many things you subscribe to. So, I may go through and find out, gosh, why do I have 2 Hulu subscriptions, one at home and one at the office, or 2 Spotify accounts? And, is there overlap? Is there redundancy where I could cut back? And I've done that before, especially owning a business and having a household where, I maybe freed up, $10, $15, $20 a month just because I had a few $7.99 subscriptions that were duplicated, or something I purchased on the iPhone, an app that for $30 that I haven't really used and it's about to auto renew. So you can go into your iPhone, and go through subscriptions and find some of that data. So adding little things like that to your routine, and this stuff doesn't take a long time, but if you save yourself $100, $200 a month in 5 minutes by doing that exercise, that is definitely meaningful.
Yeah, that's good. I think so. That's a little bit on the reflection process for planning. Um, David, for you, how do you like to plan out your year of spending? Obviously, we all don't know exactly what our income is going to look like for an upcoming year, but how will you start? Where will you start for planning out, budget and cash
Yep.
flow for a year?
Well, information is key. So start by going through and getting with my accountant and going through what did I actually spend. So tracking it throughout the year. And Carson, you're better at this than probably most. So having, I go through and have it categorized. This is what I spent. I'm just gonna make up numbers. Let's say I spent $100,000 personal expenses, and 20,000 was health and wellness, 10,000 was travel, 20,000 was household, and then I saved X amount. So going through and getting that data, then comparing that to my income. Okay, this is my income. This is my income after taxes. So, and then looking at how much was left over. So if I made 200,000 after taxes and I spent $100,000, where did that other $100,000 go? Is that sitting lump sum in my emergency fund or a checking account, ready to be invested or deployed? So I get that information, just very big picture. What did I make net of taxes? What did I spend? How much did I invest? Then I go ahead and look at the next year, and depending on your business, like with ours, it fluctuates obviously with the stock market, but I have enough over 20 years of data. I can say, on a conservative estimate, I'm going to plan that I'm going to make at least this amount of money. And then, so this is what I'm going to do with my spending. I'm happy with what I spent last year. You know what? I had a big padding. I'm going to spend an extra $2,000 a month and treat myself or add money to the vacation fund or whatever. So I make that, and as long as it still stays within the projected income. And then if there's a pretty big gap, let's say I spent half of what I made in that example of 200,000 and 100,000, I may say I'm going to be proactive with that 100,000 instead of it just sitting in a savings account till the end of next year. I feel safe. I'm going to take 5,000 a month of that and invest it into the market and get it going, working for me. And then knowing I'll probably have an extra 40,000 at the end of the year, but I want to at least put some of that money to work, and then kind of look towards the end of the year and see how much is in there and make sure there weren't any unplanned expenses that came up that ate the rest of that kind of gap. So that's kind of the planning that I do, big picture. And then also throw in there, some, at the beginning, what are some goals? Like I feel like last year was a good year, but what would I have done differently if I accounted for more money? I would have loved to take my dad on a father-son trip out west. That's something we're talking about doing. So this coming year, I'm going to budget for that and kind of go through that exercise and make sure I put that in there as a priority. Yeah, I could go on and on about that, but that's kind of high level.
Myles?
That's good. I mean, I feel like we're all giving similar answers, but I think I do something similar. I kind of look at what I expect income to be, and then also look back at historically over the last 12 months, maybe what we spent per month, taking into account maybe any trips we took or why there were bigger months thrown in there, but just kind of averaging things out to say, hey, on average, we spend about X amount. So that's base expenses. And then looking ahead and say, okay, I think, based on conversations, this is about what I think I'm going to make this year, and planning out and saying, okay, we need at least this much each month set aside for our basic living expenses and whatever that amount may be, just to meet the basic needs. And then saying, okay, we know we want to take a couple trips. So let's try to set aside some cash for those couple things coming up. And we know we want to try and do this. And then from there, seeing what's left over and saying, okay, I would like to try and save X amount into our investments, whether that's retirement accounts or just general investment accounts that we have, and putting that money aside. And then also, making sure we always have enough in cash and emergency fund for those things that come up, and be prepared for that. I think it's probably good to prepare yourself for probably 1, 2, 3 unexpected expenses you're going to have throughout the year, because they're just going to happen, whether it's something with the house, something with a car, something health related. That way you're prepared for that. So when that event does happen, your plan is another piece of your plan isn't thrown off, that you're having to come back and then it throws everything off. I think that can be helpful, just to kind of prepare for the unexpected.
Yep. Expect the unexpected. There's no normal month when it comes to a budget and your spending. If I could stress one thing, if you were going to pick up not necessarily a hobby, but if you were going to pick up a habit, expect the unexpected. There's no normal month when it comes to a budget and your spending. If I could stress one thing, if you were going to pick up not necessarily a hobby, but if you were going to pick up a habit for 2025 and apply it to your world of personal finances, track your expenses. I think it is the absolute best thing you can do for yourself, your future self, is know where your money is going. There are cheap, easy to use personal finance apps and websites out there that you can connect your credit cards, connect your bank accounts to, and you can track your spending. It takes like, I do it. It takes like 5 to 10 minutes a day just to maybe just to categorize your spending. And, okay, this was Kroger was groceries, Publix was groceries, so on and so forth. And it is information. Knowledge is power. With that information, you have the ability to know what you're spending your money on and how much you're spending your money on and where your money is going on a monthly basis. And that gives you the knowledge to say, I don't like how much money I'm spending on eating out, or I don't like the fact that every dollar that comes in every month, it goes right out through some sort of expenses. And then you can start to allocate, okay, I'm going to start saving X amount of dollars a month and I have to make this work. It gives you the ability to be in control of your finances. And you can't be in control of your finances if you don't have the knowledge of where your money is going each and every month. So if that's anything that you could walk away from, set a great habit for 2025 is track your expenses.
Yeah, it's kind of that old adage of pay yourself first and then figure out where everything else goes from there.
Yeah, that's right. Information is key. If you don't have the information, you can't make decisions without it. You're just gonna. I hear people all the time, man, we spend so much money eating out. Well, what does that mean? What is so much money? And they don't know. So once you see it, I was gonna say it could go either way, but more than likely your eyes are gonna get big. You're like, oh my gosh, we spent a lot of money. A lot of times people just don't want to see that information because it's going to probably cause you to make changes, and that's not always comfortable. So I definitely agree. I also think it's a good time. Now, this is assuming you have a wealth advisor team like us. Obviously depends on your financial situation if you fit in that category, but meeting with your advisor and going through your financial planning software again, it's a good time. Ours is called GPM, Goal Planning and Monitoring. But going through and saying, okay, let's update our numbers, plug all our balances in from our 401ks and our stuff at, with Adams Wealth Partners or whoever our advisory team is, and look at how did we do last year? Do we have any big expenses coming up this year? Let's just run the software again, do a Monte Carlo analysis, whatever, like look at projections and see, are you still on track? That's really important. Another thing I'd throw out there that I wrote down, great time for CPA and attorney meetings. I mean, you don't need to meet like with your estate planning attorney every year, but it could be a simple email to say, we had a new child this year and we need to maybe update our will, just a quick, addition to the will, or obviously if there's any big life events throughout a year, hopefully you're going to reach out to your attorney, like if God forbid there's a divorce or a death and that sort of thing. But that's important. And then with your CPA, usually at the beginning of the year, you're going to be focused on getting information to the CPA for taxes. Probably not a great time with your CPA to do proactive planning because he or she, they're so busy doing tax returns. Usually the end of the year, like this time of year, is a good time to reach out and say, hey, is there anything we need to be doing before December 31st, last minute, that's going to help our taxes in April? In a perfect world, you have a wealth management team. That's kind of our job. We try to be that set of proactive eyes and that voice to our clients and to reach out to their CPA, just because a lot of times stuff gets lost in just the chaos of the holidays and tax time. So that's very important.
Those are some good annual reminders. Check your beneficiaries. Look at your beneficiaries on your IRAs, your 401ks, any other life insurance policies. That's just a good time to do that once per year. Check your beneficiaries, but all that other stuff is good to make those meetings happen at the start of a year rather than being in a panic. Oh, I got to file my tax return next week. Hey, let's sit down with your accountant and let's review it. Probably not going to happen on April 10th.
Don't be so hard on yourself. Congratulate yourself, celebrate a little bit, especially, life and finances and are all chaotic and can be hard. And there's a lot going on. And it's very subjective as far as, are we ahead of the game, behind the curve? The curve is all over the place. So it's really, right. Are you setting based on what you're able to do and based on the goals you set out? Are you making progress? Are you keeping your head in the sand, or are you really going through these exercises? That's 95% of it is just having this mentality and doing these exercises, and you can continue to get better. So I think that's really important, not to become despondent and just say, too overwhelming. I have credit card debt. I'm never going to be on the other, that kind of language is definitely going to work against you.
Yeah, I think on the tax front, if you are somebody who's charitably inclined, and you want to make some more charitable contributions, you can get those in before 12/31 to count for this tax year 2024. And I believe if you have a flexible spending account, FSA, those need to be spent by the end of the year also. So
That's right.
good time to get
Flexible,
that
yeah,
out
the
of there.
FSA,
Yeah,
not the
the
H, not the
HSA carries over. The FSA does not. So if you have some cash in there,
That's right.
spend it. Otherwise, you're just going to lose it.
And you mentioned charitable. If you want to give money to charity for a tax write-off, you haven't figured out yet where, but let's just say you want to throw $25,000, a big chunk to write off for taxes. You're like, I know I want to give it to some places. I don't have time to think about it yet. Get with your advisor. We do this all the time. You can open a donor advised fund. That's where you can put money into one of those accounts, get the full tax write-off now, and then put it into an account and invest it and decide where it's going to go later. It's just no longer your money. You've made it a completed gift into charity, but you get to decide where it goes and when. That's something a lot of our clients are doing, and we do here at Adams Wealth Partners as a company with some of our profits and that sort of thing.
Mm-hmm. Yep, it's got to be done by 12/31. So that's an important deadline to remember. Well, good deal. Those are some pretty good tips and tricks, I feel like, for looking back over the previous year and also doing some proactive planning for the next year. So thank you guys for giving some advice. And as always, we're always here to help. You got any questions about your specific financial plan? It's obviously different for everybody. So feel free to let David, Myles, or myself know. We'd be happy to help you out. But thanks for joining us on another episode of the Retire While You Work podcast. And we'll see you next time.
See you next time. Thank you.
Thank you. Any opinions are those of myself and not necessarily those of Raymond James. Expressions of opinion are as of this date and are subject to change without notice. The information contained in these podcasts do not purport to be a complete description of the securities market or developments referred to in this material. The information has been obtained from sources considered to be reliable, but we do not guarantee that the foregoing material is accurate or complete. Every investor situation is unique, and you should consider your investment goals, risk tolerance, and time horizon before making any investment. Prior to making an investment decision, please consult with your financial advisor about your individual situation. Any hypothetical examples are for illustration purposes only. Actual investor results will vary. Raymond James does not provide legal or tax services. Please discuss these matters with the appropriate professional.